Ghazil, you're going to tell us now how we finance these guys, I hope. And I hope we'll still have a little bit of time for questions, but if we could try to keep it to 15 minutes, then we still have the room before being kicked out. And I'm sure that some of these people would like lunch as well.
I'll try my best. Thank you for
Thank
that.
you.
I was already overrunning the presentation, but I'll try to make it short. So thank you, Peter, and thank you all for being here. My name is Ghazil Jabbar. I'm the managing director at Capital Connect. This is a financial advisory firm focused specifically on Pakistan. It wasn't too long where I wasn't, as a part of the PPSC team itself till last year, where I parted ways with the project to set up the private equity fund. But before all that, I'd just like to give you some history around how we conceived this fund. So it emanates from, the project pipeline. We were 1.5 years down establishing the PPSC project. We originated an excellent pipeline, went through, the project preparation facility, superb projects, looking very good. When we reach out to the market after a year and a half, we kind of discovered that, the lenders wanted more collateral, and many of these entities were small SME businesses focusing, towards early stage R&D and establishments. So, there was lack of collateral. There were, typical problems that PFAN addresses. So, the projects weren't really bankable. And same with the equity, the equity providers. I mean, they had different issues. So the issues were primarily Pakistan risk, macro risk. They weren't looking into Pakistan primarily because of the PKR depreciation issues, political instability, etc. We'll talk a bit more about challenges, but we realized at that point that we need to really go the last mile and create an equity product which is geared towards projects like the PPSC project was prepping. So that's where we went back to the drawing board, created an equity instrument, an equity vehicle, which focuses primarily on Pakistan, and of course, we had to include surrounding South Asian countries to make this proposition a more viable proposition. So we went through a process. Capital Connect was engaged to establish the private equity fund. We brought in a JV partner. This is a specialized private equity impact player out from Switzerland with a Swiss and a Luxembourg-based license. They have an excellent track record. We'll talk about that a bit as well. But as a consortium, you look at Apex. Apex is, we're white labeling our fund in Abu Dhabi, in a jurisdiction which is neutral, which is very conducive to green funds, very conducive to Pakistan because of the double taxation treaty. We did a very extensive jurisdiction analysis before selecting the jurisdiction. So Apex itself is the manco, as you would say, and they provide the license in Abu Dhabi for us. As a consortium, we've done 300 plus transactions in clean energy, in climate resilient transactions across the globe. 60 of those in Pakistan itself. Over the last 22 years, I've been a financial advisor. I've been on the M&A side with companies like JP Morgan, Capital Partners Group out from Singapore, supported them in Pakistan. So lots of climate experience here. And then we've, as managing AUMs, we've managed and raised $800 million globally across, in terms of private equity. So the partner brings in a very solid experience, around 27 funds, all in the impact space. We have a last slide where I'll show you exactly how experienced they are. So, building on that platform, when the teams got on board, the jurisdiction was finalized, we set out to determine the strategy of the fund, right? So this is a $150 million fund looking into Pakistan as a focus. So 60 to 70% investments will be in Pakistan. We want to diversify risk to attract more LPs. So, the fund is open to investing in South Asia. There are tremendous opportunities in Bangladesh, energy efficiency, Nepal, hydel projects. Sri Lanka is in the mandate, but because of the political turmoil, I realized that we might not be able to address that immediately. But overall, we're able to invest in the low carbon space across a variety of sectors, and we've kind of categorized those in line with the PPSE project as well. But it's sustainability, sustainable mobility, it's clean tech and energy efficiency, agriculture, and renewable infrastructure. So that becomes more of the crux of the PPSE pipeline. And of course, the platform, as I explained, is very complementary between an international asset manager with tremendous impact experiences across North America and Europe, and then Capital Connect, which is very, very Pakistan focused. We understand the local market. We are on ground. We are able to, I was a part of the PPSE project, so I was responsible for origination and execution of many of these projects that you see as well. So based on that, I think we put down a very, very solid value proposition to offer risk, return, and impacts across for this fund. Why South Asia? Firstly is because this project again is seed funded by the USAID. The grant money comes out from the PPSC project, and so thanks to them, to be honest. So we have to address and it was created really for the projects like the PPSC. So although it's not exclusive, but our first project targets are the PPSC pipeline. Thus, you see Pakistan there. Then the adjoining countries in South Asia, and this is ex-India because India is a much bigger environment with very different dynamics now. Things have changed in India, but these are the more developing countries which we really want to focus on and address the challenges that are prevalent with developing countries. And the reason why we want to do this is because we are seeing that capital is not flowing in this region. So simple math that we pulled out from one of the World Bank reports is only 3% of the climate finance is being channeled into this part of the world. And Pakistan alone is the 8th country which is most affected by climate change over the last 5 years. So this of course, with $150 million, it's like a drop in the ocean, but this is the first step we're trying to take. Again, one important statistics, and from RapidDev's example, where you see a lot of smog in Lahore. It's one of the countries with the worst AQI indexes, air quality index, as you would say. So in Pakistan and South Asia, there are 3 countries which have the worst AQIs in the entire world out of the top 10. So so those are the numbers, but the capital is only 3%. So we find a need in this market which no one is really addressing to. This is a very interesting slide where we're talking about, I'll just step here a bit, but more about challenges and how the fund is trying to solve these. And this kind of becomes crux of, much of the discussion around here as well. Firstly is the quality of projects and deal sizes. What we've noticed is that DFIs look into Pakistan and developing countries, their deal sizes are typically $15 to $20 million per investment. Now, this doesn't tie up with PFAN, PPSC style, SME stage projects and early stage ventures. So there is a big disconnect. What we intend to do is to partner with, and of course, we have the PPSC pipeline in place, properly develop projects through a project preparation facility. We intend to tie up with other project preparation facilities in similar manners. And then we are able to source those deals from that perspective. But addressing the chunky issue, which is the 15-20 million benchmark, we are able to, as a fund, raise DFI money and then invest $3 to $10 million per asset, which kind of solves this problem and solves this challenge here as well. Secondly is macroeconomic risk. Now, this is the biggest challenge. I mean, this is beyond PPSE, us as a fund. This is more macroeconomic. So it's about what's happening in Pakistan, the rupee depreciation. All this been stable over the last year and a half. But we've had an average depreciation of 8 to 10% over the last 10 to 12 years. There's political instability and there's a lack of exits. Every time we speak about to an investor, they talk about where's the exit, where's the exit. So we've got, we thought through this solution, and one thing that we wanted to bring on board here is the blended finance instrument. I think that really helps in this situation where we're able to bridge some of the macroeconomic risks through blending. And this is where we're able to offer a better return to commercial investors through a blending product. We have a short slide on blending as well, but we will talk about that. We have also established, the jurisdiction is ADGM, which is very neutral. It has an excellent double taxation treaty with Pakistan. So the fund becomes, it's financially, the way we structured it is financially more beneficial to go through a fund versus investing direct. And primarily because of the double taxation treaty, ADGM has a green taxonomy. We're registering this fund under a green certification, which will allow us to use that branding to raise funding. It's a very stable economy, and it's growing. So we're going to be one of the first 3 or 4 funds to be registered under green funds. So the process is that we're in the process of being registered, and we will be starting fundraising hopefully next month. The last point here that I mentioned, I mean, there are challenges, but I've picked out the key ones here. So there's a lack of professional PE funds in Pakistan. I was creating another private equity fund, which I would just want to share. We created this fund, which lasted for 1 year. We raised funding as well, but we realized that the government instantly changed their policy on taxation. So, the entire business model collapsed. We realized at that point, and that company had to close their funds. So we realized at that point that the inconsistent policies can actually create the biggest hurdles typically for a private equity or venture capital play. So that's why we structured this time in ADGM with a very solid infrastructure in and out of Pakistan as well. There is lack of local talent. That has been a biggest challenge for the longest time here as well. How we're trying to address that is important. So we selected our JV partner in a way where we have someone who has solid ESG experience. We wanted someone who complies with the ESMS frameworks. We wanted someone who knows what ESG is and how that compliance matters. So they've got proprietary ESG built frameworks where the investee companies will benefit from these. And we will make sure under a technical assistance that each of these investee companies undergo a gender equality gender framework. We will make sure that they comply with the ESMS frameworks through a technical assistance service. Now, I just want to stop here a bit, and talk a bit about each of our projects as well, and how we're looking to address those challenges. So I was speaking with Waqas the other day, and one of his concerns was dilution, right? And so this fund is able to offer multiple products. So Waqas said, if I ask for $1.5 million, I don't want to dilute too much. We had a solution for him from the fund. So we said we could do part common equity, we could do a preferred instrument, something like similar to a safe note, which will be like a Class B share. So he doesn't have to dilute that much, although he still gets the money, and that converts at the time when he achieves a certain EBITDA level. Similarly, with Easy Bike, I spoke with his partner and Ali as well in the past. They've solved the issue themselves. They've got a holding company out in Singapore, right? So the problem of exits goes away. So we would ideally want to look for companies like themselves. Even if they didn't have one, we would recommend them to have a holding company, and there is provision of law to do that. So we are able to support, and as an advisor and as a fund. So we've thought through all those angles on how to really address these issues with local companies. A bit about our deployment strategy. We're looking at a $150 million fund. We will achieve first close between $30 to $50 million. That's our first target, with the second close around 60 to 200 million. If you see this pie chart on the right, this is where Amar steps in from the PPSE pipeline, and thanks to them for offering the pipeline to us. So we've shortlisted the PPSE pipeline to bring in projects which are very close to the fund's investment mandate. So if you see, there is clean transport, which is the supply chain across e-mobility, 42%. We're very focused on bioenergy. These are biogas, biomass projects from agriculture. Waste to energy, this includes more recycling type opportunities. So we've got this, the pipeline prepared under the PPSE project, which we've shortlisted for the fund.
Ghazil, I'm going to have to ask you to wrap up in a couple of minutes,
sure,
please.
This is actually the last
okay,
slide.
Great,
Yeah.
great.
So this is the structuring, and this is about blending. We have structured this fund under a commercial, a sub fund A and a sub fund B. We're still undergoing this process, but the thought here is to have commercial capital alongside blended finance, and we are able to blend according to the country we invest in and according to the transaction we would. So for someone like Arif, who has a USD based revenue, the blending would be a bit different compared to someone who has a PKR based revenue. So we are trying to attract and offer the solid return to commercial investors. This is just the last slide, just to show some track record, from our partners. They've invested primarily in North America and Europe, and they're into the impact space sectors. If you see the last one, that's Climate Core Asia. We are looking more into the climate and the clean energy side, but we will build on a lot of the impact terminologies and frameworks from our international partners. Thank you. With that, I'm open to questions.
Thank you very much.